What's up, guys? It's Rob here, and we need to talk about support.com, ticker symbol SPRT, because we're down about 8% today. And, that's not the worst news in the world. We're actually brushing up against an old support level. And we also need to talk about some new data that we just got regarding the short interest for SPRT. So let's take a look at the chart and see what we have. You can see that we are down about 8% on the day. We've been kind of getting pushed down all day, just trending downwards. And this is actually happening on some new shorts, right? New shorts are coming in and pushing this thing down. We've increased by about 2.7% short interest wise. I'll reveal that data pretty soon. But first, I will note that we are hitting a fairly solid resistance level that we formed at 2380. And you can see we formed that just yesterday. We were bouncing off of it many times. We bounced below and were unable to sustain any holds below it. Just throughout the day, we kept hitting this level and kept bouncing up until eventually we made highs of 27.57 and closed the day around 26. So now we are once again, trying to break through, just brushing up against this level. We keep bouncing below and then bobbing back up above, and we're currently in the process of bouncing off of it right now. So with SPRT, what a lot of people have been hoping for is a massive short squeeze, and this is actually based off of some data that we've been looking at, it still looks, potentially possible, right? 61% of the float is shorted, at least on MarketWatch. Now, MarketWatch actually has outdated data, old data, potentially manipulated data, and it's not the most current stuff that you can get, and it's not actually very accurate at all. And what I've done is actually purchased a stock screening service, Ortex, and that lets you see real stock data. And you can see right here, the current short interest of the free float is actually 88.99%, and that it's gone up by 3.3% just today alone. So what you can glean from that, right, is that, well, not only is, first of all, MarketWatch complete garbage, right? It doesn't actually have good data, but you can glean that shorts today are pushing this thing down because they're getting very scared. Because if you looked at that short interest, 88.99%, that's almost 100% of the free float. That's very crazy for this stock, especially considering that it's been moving up so much. And we don't know exactly when these guys started shorting, right? I mean, potentially some of them were shorting around $5, $6, $7, $8, $9, $10. And those guys are probably feeling a lot of pain because they have already lost, double their initial short investment, right? We're at 23 right now. So if they were shorting at 10, they've already lost more than double what their initial investment was. And this could actually be causing a pretty big short squeeze looking forward, right? Especially if we can start closing higher and getting some margin calls on those institutions. And the reason they don't want this to happen is because, well, you can see that they don't want this to happen because they are drastically, like even today, even though the short interest is so high already at 88.99%, they were still, even today, increasing it by 3.3%, which just seems absolutely crazy. I mean, they are really running out of options here if they have to increase the already extremely high short percentage just to try and push this thing down. And I will admit, there is a real possibility that if they succeed, they could make quite a bit of money on this, right? If they have massive short positions on this thing and it ends up crashing, then sure, they could make a lot of money. But from where I'm standing, it doesn't seem that likely that this thing is going to crash. I think that it has a lot of support, and especially now that we have real data, and real data is getting out there about how compelling of a short squeeze this is. I think that a lot of people will have more conviction in this play and potentially be more willing to hold through any bumps and be less willing to paper hands this thing and let go of it. Now, I know that if you're a trader, at least, it's very important to have a stop loss and a stop gain. Now, I'm not talking to traders right now. I'm talking about people who are in this for the movement, right? People who believe in AMC and GME and want to really stick it to the institutions. Those are the people who are likely going to be holding this thing through thick and thin. Now, if you are a trader, that's perfectly fine. And, obviously you should have a stop loss and a point at which you're going to sell and, cut your losses quickly and all that. But this video is more so meant to inspire and inform people who are more so in this for the movement and looking to potentially make a massive, massive profit, but also are willing to accept the risks of a massive loss if this thing goes south, right? Because obviously there is a risk and reward to things. And if you're just going to hold something, then, it's going to move up or down. In a situation like this, where there's a big short squeeze and we've already moved up, it is either going to be moving up a ton or down a ton over the coming days and weeks. So what we can actually use to glean where it might be moving is some open interest call option activity. We can see that, in the past, the currently in the money options, there aren't that many of them. There are a couple thousand for each strike price. However, if we actually got this stock to $30, there are about 20,000 open call options on that. And that means that if we really got close to that price by September 17th, which is the strike date for these options, institutions would start having to cover their position and not cover their short position, right? Because that's based off of a margin call. And if their brokerages actually margin call them, but they would have to be buying shares to cover these call options, regardless of how big of a loss it was, unless they potentially wanted to buy back the call options, but that's only if people are willing to sell them to them. If people actually hold these call options through expiration, then institutions will have to be buying SPRT shares because they'll need to give them in exchange for the option exercise, and they'll need to give them to the people holding the call option contracts. And what's very compelling, actually, that I found is that at $85, there are 12,000 open interest call options. Now, 12,000, obviously, it's less than 20. It doesn't seem like that much. However, what's very important about these are that they're for $85, and we are actually very far from $85. We're at $23. And the fact that these are at 85 right now, and there are already so many, means that if we keep moving up going forward, looking towards September 17th, then this specific strike price on this strike date will likely get many, many, many more options being purchased for it. And right now, the ones that have been purchased and sold for very cheap, right? The institutions sold these for very cheap, and so they'll be looking at massive losses on these options contracts if we start getting closer to $85. Like you can see, that even at $27, right? The $27 call options are selling for about $4. And we're at $23. So if we got this thing to like 60, 70, 80 bucks, then these $85 call options, which are currently selling for 35 cents, could be selling for, they could be selling for like 10 bucks at that point. Because this thing scales up, right? As you get more expensive, as the stock that's underlying these options gets more expensive, the options contracts themselves get more expensive as well. So higher priced stocks often have higher priced options contracts. And that would be a massive loss for a lot of these institutions and a huge pressure for them to have to buy SPRT shares to cover that position. So the gamma squeeze, there is a potential for it, but what's really compelling about SPRT, I think, is the short squeeze, because when you look at the percent of free float that's shorted, 88.99%, that is absolutely massive. And that should have any institution scared. And I am not necessarily confused, because this is just what institutions do, but I am just bewildered by the fact that they are still shorting 3.3% today. That just seems absolutely insane. They must be very desperate trying to push this thing down. And, from the look of it, they have been somewhat successful, right? Down 8% about today. But we'll see if if people's conviction in this thing pays off, and if this thing actually ends up pumping up. And if it does, then, all of those institutions and all of those shorts are really going to be suffering, because they have just been digging themselves a deeper and deeper hole. You can see seemingly every day, just shorting more and more shares and digging themselves a deeper and deeper hole, but also building up more and more of a reward for people who are involved in this stock and who are potentially holding this for the long term. Now, obviously, if you're a trader and you're just trying to trade the movements, that's not the way to go about it, and you want to have stop losses and points at which you take your profits. However, some people are in this for the big one, right? They're hoping to get a massive profit out of it. And while that's less it's less likely that you'll actually be profitable doing that than actually just taking little trades that you have high convictions on, the potential reward for that is massive. So it's really a war between the institutions and the retail investors, and we're going to have to stay updated on this. So that's what I have for you guys today. Thank you for watching. If you enjoyed the video, feel free to subscribe to the channel and like the video. I'd really appreciate that. And I'll see you guys in the next one. Have a great day. Bye.